together the charts to find out what's going on, why the markets are moving on the way they are moving. So I'm here today to see where we're standing right now, but also to have a look on in December. Okay, so just a quick briefing, not too much. Like later on we might see the seasonality of December, but today we're gonna have a quick discussion on any fundamental facts that could support or weighted in the market, or any kind of factors other than fundamentals that actually drive the market, especially as we are heading into the year's end, and as we see we have in front of us Black Friday is actually tomorrow, and Christmas holidays, which is a period where we've seen quite low volumes, but not necessarily low volatility. Actually, the volatility is quite high in December. That's why we're saying that is a good month for investing, because based on the history of it, there is a seasonality. That supports quite well the equities. What I'm trying to say is that in December, historically, for the past 40 years, we have identified some kind of an appreciation in the equity markets for December, more precisely. So let's I don't know whether you are here with me, you can hear me loud and clear. Hopefully you can. So guys, it's a Facebook Live and a YouTube Live. You can ask me anything you want. You can ask for any asset you want. So I'm here to help anyway. Okay, I'm ready to go actually. So let me firstly do a quick briefing before we move into the markets. Let me do a quick briefing. Oops, no. Let's skip that for now. Just a quick briefing of what happened so far today and where we are standing. First of all, I would like to highlight that it's a shortened week. What that means? It means that US is closed on holidays for today and tomorrow as well, Thanksgiving Day. So it's a short week. It's like 4 trading days instead of 5 that we usually have. So other than that, is the month's end. Okay, November. We're actually reaching December next week. So as every end of the week, every end of the month, every end of the year, we've seen positions closing from the majority of the investors, or repositioning in the markets, and in general different market flows. Okay, so that explains as well why we have seen a bit of a profit taking, if I could say, from the record highs that we saw on Tuesday for Dow Jones, Nasdaq, S&P 500, and so on and so forth. So there is a bit of a profit taking. Remember, on Tuesday we had Dow Jones reaching above 30K, so a record high from Dow Jones on Tuesday. But right now, and if you okay, let me put it side by side so you can have a look as well. So okay, that doesn't look good. Let's keep it as it was. Here is Dow Jones. We've seen a bit of a reversal. Okay, so this is really due to the Thanksgiving holidays, the short week, but more or less on month ends. So we have seen equities a bit lower, slightly lower profit taking, not only for Dow Jones, but also from all the major indices, European indices, DAX, FTSE, Nikkei. So in general, the equity market is traded mixed to a bit lower so far today. And that's because of what I already mentioned, some hefty month-end um, um, flows. But nonetheless, even though we have seen a bit of a risk appetite fading, okay, there is still a lot of cautious and uncertainty in the market, and that explains why we've seen some choppy sideways movement, or small, if you prefer, small moves, some baby step moves. So why I'm saying that there is a lot of a lot of cautious and a lot of a lot of concerns is, first of all, geopolitics are back. Okay, so it is crucial to see now with the Biden transition how the new administration could amend the US-China relations. So remember, Biden is taking the control sooner or later, so it will be January. I don't remember the exact date. So we have a Biden transition. So there is a lot of uncertainty in the background. First of all, on how the US-China relationships will develop under this new administration. But also, there have been some reports out of China yesterday that actually China hasn't really complied with the phase one trade deal, which also already stands. So that added further concerns and uncertainty into the geopolitical side. Other than that, let's not forget that we have Brexit. Even though it's very, very disappointing, but it's still in the background. So let me refresh your memories in regards to the Brexit. So we have still lingering risk aversion coming from Brexit, and especially from Brexit headlines so far today. So remember, there was a huge lack of progress in talks, okay? Something that weighs, of course, into the markets, the equity markets, FTSE, even pound. However, pound is still benefiting against dollar, but that more or less is due to the dollar weakness. So Brexit, as I said, still weighs on the positive sentiment. So especially with headlines such as that like from officials, European and UK officials saying that they would prefer a deal, but not at any price. So they are not ready to comprehend, to negotiate, really to find out, like to agree. So they are not ready, as they said, to provide a deal at any price. So this really much is a game of chicken that continues, if you ask me. So we have seen Mr. Barnier yesterday saying that there is no point in him traveling to London unless there is reason to believe that there will be progress. So we've seen that they haven't really reached to a level in which we could say that we're going to have a deal after all. So there is still no breakthrough in the negotiations between those two. There are a lot of warnings for border cows and fishing, and also there are some alerts from Bank of England in regards to a long-lasting economic consequences in the event of a no-deal exit from the common market. Okay, but beside all that, even though we are reaching the deadline again of Brexit, the European Union is still there saying that it won't easily walk away from negotiations, and that's pretty much quite good, even though we haven't seen any development. That minimize a bit the odds of a no-deal scenario, even though the scenario is still there. It's still like waiting on the market. So So as I said, there is a chaos in regards to the borders and the fishing. The fishing tends to be the top in every single headline in regards to the Brexit. EU is more willing to compromise, but UK is not. Okay, so this is where we're standing in regards to Brexit. So since we started with Brexit, even though that wasn't what I wanted to, let's see pound together. Okay, I saw your comment, Bangash, that you want gold. Let me cover um, pound since we start with Brexit. And okay, and here we are. Okay, perfect. So pound, I will start with the 1 hour chart, with the daily chart, sorry, just to keep an eye to show you these two lines. This is a key resistance area, okay, should be, because it's the round 134 area, okay, round 134, that it was tested several times this week. So tested on Monday, Tuesday, Wednesday, and today again, but never managed to break it. It's also nearly 3 months resistance, because the asset hasn't really came back to 134 since the end of August. So a breakout of this barrier, you can understand that it could alert further steam to the upside, maybe to the peak that we've seen in August at 134.80. So that's the very next resistance area to be seen, in case that the asset managed to break the 134 territory. In regards to momentum now, even though we are to the upside, we see some kind of a nice upwards channel in the daily chart. Okay, perfect, and a nice pitchfork, Andrew's pitchfork setup over here. So even though it's moving like within an uptrend, and that's quite good, it fails to break that area that I just told you, 134. But momentum is quite good. It's keep extending to the upside with not with extreme positive bias, but it's slowly improving, pointing further to the upside. So the overall picture remains positive for pound. Okay, despite the pressure on the UK government, despite that the deadline is finally there. It's actually on Tuesday, December 1st. Is the deadline which leaves just 1 month for a deal to be ratified on both sides of the channel. So despite Biden pressure that warned London that the scope for the deal with the US would be compromised if there is a return of a hard border on Ireland. So Biden back in play right now, pressuring also UK. Okay, so a lot of pressures. Deadline is on Tuesday. EU is not willing to give the Brexit the deal with any cost. Really tough on the border negotiations and on the fishing negotiations. Biden is now adding further pressure to UK by saying that there will be compromise if there is a return of hard border too on Ireland. So you can understand that there are a lot of pressures on UK, with also Mr. Macron against, actually showing very strong willing or fighting literally over fishing rights. Okay, so France as well, one of the key countries for the future of trade deal between EU and UK. So because of all this, you can understand that there are some limits, or there will be some limits, fundamental limits, in regards to the appreciation of the pound. So with all this on the background, there is a limitation of how strong the pound could be in the medium-term picture, let's say in December or January, like in the next few months or so. So even though it is appreciating, it's because of dollar weakness and the risk appetite rather than pound strength. Okay, so for the market now, really much the impact of a deal to the market will depend on how narrow the deal is. The narrower it is, the bigger the negative impact on both UK and EU markets will be. Okay, so that was on sterling. Now let's see the intraday picture though. Okay, overall we said that the daily chart remains positive. It's for more than 2 months time to the upside. A break of 134 could reach to 134.80. So let's move on to the 1 hour chart and see what's going over here. So we can see that appreciation. Okay, can you see that? So by connecting with this green line, okay, by connecting my fractals, which I didn't properly connect them, okay, here we are. So 1 hour chart since 19th of November, so more or less a week from now, is moving to the upside, posting higher lows, so is sustaining the positive bias, but we've seen a big sell-off today. You see that? Big sell-off, retested, after it retested 1, 2, 3, 4 times the 134 territory yesterday, it drifted to the downside, retesting this support area with momentum turning lower. Can you see that? However, the signal line is still above zero. So there is in the medium term a bit of negative bias, but as long as the asset remains above this trend line, above this support line, okay, we could see finding some kind of a floor over there. If not, if it managed to break that asset, then the next area to be seen will be the latest fractal 133 area. So I will say that the picture in the 1 hour chart is more negative than neutral. Why? Because despite the fact that it's still above our support area, it's above this trend line, my support trend line. However, fast MAs are pointing lower. The Bollingers is also pointing lower, like expanding, okay, to the downside, and that suggests that bears are trying really much to gain the control. But as long as this trend line is supported, then the overall picture remains positive. Hope that helps. Okay, so let's move on. And I need to keep an eye on the Facebook questions, because I can see only YouTube ones. So okay, before I go to Euro, then I will reply to my dear Bangash Sadagan Bangash. Welcome dear, for gold. So okay, let's flip to commodities then. Let me quickly. Where is my gold? Here it is. Okay. Oops. Okay, here we are. So gold was a bit choppy today. Let me start with this 1 hour chart, so you can see that it didn't really change significantly. There is a range over here within 118 round number. Okay, I will put it somewhere here, 1800s and 1880, 1818, 1818, 1818, sorry. So there is a range the past 2 days in a row. Very, very choppy gold. Actually, okay, there are a lot of questions below the. Okay, on the Facebook page. Sorry, let me just fix it. Okay, perfect. So, okay. So gold, okay. Also, Damsanka wanted gold as well. That's perfect. Let's keep an eye on gold. So as I said, gold, gold. The last 2 days is in a very, very choppy sideways movement, and despite despite the fact despite the fact that in a risk on situations, gold should have been appreciated. Nonetheless, we have a weak dollar, like a lot of flows away from the safety of dollar, but more or less to other more safe assets such as stocks. So implies that there is not a lot of volume into the gold. So choppy sideways in the near-term future in the 1-hour chart, flatten close to zero MACD, flatten RSI. So whole consolidation remains for the 1-hour chart gold. If I shift to the daily chart, however, you can see that is at the key support area, and I would like you to keep an eye on it because after all, today's live analysis is for a discussion ahead of December. So look at that. So we had, okay, descending gold, declining, corrective, declining, corrective, declining, corrective, declining since July, okay, forming some kind of a descending triangle, okay. But now, other than the fact that it has broken this key support area at 1850 just on Monday, if I'm not mistaken, it then broke also the next support area at 1818, which was the resistance back in July, which has now converted into support, but it has also broken that area, okay? So the next real key psychological area to be seen should be the round 1800s, okay? And that's quite a it might be the most important level to be seen for December for gold. Why? Because we are already below the 38.2 Fibonacci level, so that implies straight that we could see a retest of 50% or even 61%. But nonetheless, the 1800, if I zoom in, 1800 is also my 1200 day moving average. Key psychological level, round number, coinciding with a round number and a 200 day moving average. So you can understand that the overall outlook for gold is bearish because we have seen breaking August, September, October, November, 4 months support at 1850, but nonetheless posting very strong bearish candles on Monday and Tuesday, which managed to break our immediate support area and is now retest the 200-day moving average. So a move below that level, below 1800, could open further steam to the downside, more and more bears into the market, pushing lower, even though this is already happening. I mean, the momentum, you cannot see MACD, let me put it on again. You can see that MACD is extending further to the downside. So there is a lot of bears in the markets trying to take the control of the asset. Okay, so momentum indicators and the breakout of the descending triangle pretty much turns the overall outlook into a negative one. So that was on gold. So I replied to Sankaline, to Kellen for gold, and also to Mr. Thamas Hanka from Facebook. Okay, let's move on. And to Maskur, also Maskur asked for gold. How PMIs and GMI impact to the market? Okay. Okay. So you should know that first of all, every single economic data, okay, are correlated with the country's currency. For example, if we see a slowdown on the production index or in the United States for November, a big mist, sorry, excuse me, a big mist, then that is bad for the country's currency, tends to depreciate. So there are a lot of correlations between the economic data and the market, because you understand that the economic data give us a hint on how healthy the economy of each country is. So by getting this data, we can see how healthy it is, and if it's healthy, then the currency should be strong. Its currency should be strong. If it's not healthy, if it's a weakened, slowdown economy without any growth and into recession, then this suggests that there is a cheap, I would say, currency. So you need to learn a bit, or you need to study a bit what each economic data means and how they affect the market. Okay. So that's the first thing. But also you ask for the global market index. Is it what you are referring to, dear dear YouTuber? I will wait for your reply actually, because I'm not sure what you are referring to. Not sure if this is what I understood. Reply already? No, you haven't. Okay. So, okay, until I get back a message from a YouTuber. I will move to the next question. Okay. So I think you mean a global market index. Okay, I'm not sure for that, but you should know that if you're referring to global market index, you should know that sorry. So sorry. Let me just quickly check because it's stuck. Okay, I will get back to you. So, okay. I want you to confirm, dear YouTuber, what do you mean by GMI? Just confirm me whether you're referring to the global market index, and I will get back to you. Okay, I will move on with the rest of the questions until I have news from you. So let's move on to Euro Swiss. So Euro Swiss, it's not there. Okay, let's put it on then. Okay, here we are. So you should know, guys, that Swiss and yen have been underpinned today. Okay, so they found a lot of strength, especially against euro and against dollar. So what we are looking right now on Euro Swiss is a bit of a, let me zoom out, close, okay. So a bit of a reversal from the peak at 108.71. So some sell-off, as we see over here, breaking the 200 period moving average in this 1 hour chart, with all moving average pointing to the downside. So there is a lot of pressure for Euro Swiss. Nonetheless, okay, this is as I said, this is more of a shift to safe havens like Swiss rather than weak euro. So euro is quite strong against the majority of the assets, except from the safe havens such as yen and Swiss. So in general, there is still some cautious into the European Union as well because of the Brexit and because of the latest data from Germany. So earlier today, this morning actually, we saw consumer confidence actually dropping to the lowest level since July. So a clear impact of the second wave of COVID-19 to the German economy. So we've seen like slowdown of business expectations, slowdown of consuming, and in general. So this is actually something that added slight pressure on euro. Okay, so all the even though the Germany has been the one that was more successful at keeping the COVID-19 into a bit of a control in regards to mortality and infection rates. But today's data suggested that there are more and more measures should be taken, okay, in order to help the European Union and the European stocks and the economy in general. So Euro Swiss, okay, because as I said, Swiss and yen have been underpinned today, okay, have been actually supported quite well today. They remain quite strong against the majority of the currencies. So what we're getting from this Euro Swiss right now is this big sell-off, nearly twisted top over here that triggered the pullback, break out of the 200-day period moving average in this 1 hour chart. So, and long tails. Even though this candle hasn't finished yet, there are long tails to the downside. That suggests a lot of bearish momentum. And along with the fact that MACD is extremely negative. Okay, bearish crossover here. Fast moving average are pointing further to the downside. Let's check RSI as well. RSI is also lower, okay? It's also pointing to 30 area. Then this decline is not running out of steam. So the next level to be seen should be this floor over here, okay? 107.98. You can use the fractals to find the immediate support levels, but key support area to be seen would be the 107.95 or even the 107.88. Okay, key support area as well, which has been sustained for the past 2 weeks. Daily picture though remains very well positive. You can see that it's holding gains, it's holding this key areas, high territory since May. Okay, and we have over here a nice bullish cross, two bullish crosses. One, the 20 above 200, and the other one is 20 above 50. So the near-term outlook, the medium-term outlook, so for the next few days or weeks, remains to the upside, as long as it doesn't shift below 107.88. Hopefully that replied to your question, dear YouTuber. Oh, that was the second question from you. Okay. Thanks. It's looking better in future. Sell gold. Amazon shares are open. So Amazon should be in an hour, I think. Yeah. So yeah, it should be in an hour, dear. It's not open yet, but since you mentioned, so it needs an hour, okay? Yeah, it needs an hour, exactly an hour at 4:30 my time. Okay, since you mentioned Amazon, okay, here is Amazon in a daily chart. We have posted earlier a very interesting post from my dear colleague in Latin America, Aldo, okay, who actually made a quick research on quick research, and I will actually want to share this with you. A quick research on Amazon and how Amazon affected by pandemic and how it could affected by Black Monday. So you remember the online retailers tend to have a lot of profits and nice returns, strong returns, revenue during the Christmas season and with Black and on Black Friday as well. So interestingly, where am I standing? Okay, sorry. Sorry. Why is that? Interestingly, my colleague quite nicely um, identify a very rare um, candlestick pattern, the so-called diamond. Okay, so let me draw it for you if I can. So it's like, I'm not sure whether I can, but I will try. Okay, I will try, but no. So there is some kind of a diamond. So, okay, I'm not great on drawing, and I did it wrongly. Let me fix it. Okay. I'm not sure whether you can see this, but okay. Okay, I will draw it better. Sorry, I need to. So you need to. What I'm trying to do is connect these fractals, okay, and having another one at the top, if I can't. And I can't. I'm not good at drawing. So okay, connecting these fractals over here and merging it with the other. So connecting fractals 1, 2, 3, 4. 1, 2, 3, 4. Can you see that? So it looks like a diamond, okay? So the theory of diamond says that if here's the first immediate support data 35 round number, and another one key area to be seen also is the round 3000 area. Okay, so it has formed this kind of diamond pattern. So diamond pattern, if the diamond breaks to the downside, so breaking outside this diamond pattern and even breaking the key 3000 level, then the asset is expected to decline even further. Okay, so this diamond pattern has started since July, okay, with a failure to make a move above 3500s, okay. So if it moves further to the downside, then this will turn as a bearish formation pattern, okay. So a candlestick pattern, and then if the asset turns positive, if it breaks outside the pattern, then this is a bearish formation, and we could see line still to the downside and a potential retest of the 200 moving average at 26.94 or even lower. Okay, so keep an eye on this. It was a very, very interesting report from Alto, okay, because he identified this diamond pattern. So by measuring the body of the length of the diamond, as soon as you have identified an exit area, like an entry area for the opening position, so as long as it breaks the diamond, then this length could be used for identifying potential support or support levels, so targets, if you get what I mean. So by measuring this distance, you can identify future targets if the asset suggests you that it could decline further outside the diamond. So keep an eye on the report from Aldo. So now, since you asked me, let's move on to the intraday picture. So we have seen like some choppy sideways movement, but appreciation like the last few hours, like yesterday actually. It topped to 31.97, so it literally recovered nearly 50% of the decline that we've seen in the beginning of November. So this is a key resistance area to be seen. If it breaks, it could turn back to the upside again at 32.30 or even 32.85. That's on Amazon. However, this is a key area to be seen, so we might see a bit of a retracement on the EU or the US Open, because let's not forget that it's a month end, so we might see a lot of position closing, so we might see a pullback. Okay, so let's move on. Not sure what's that, dear Tisha. Hello, Karan from Mumbai. Please would like us to be having more this section. So, okay, if you would like more Facebook Lives, please send us in the messenger your request, and we'll work on it. If there are a lot of you wanting more live analysis, we will try to do our best to maybe move it 3 times a week or maybe more, I don't know. Okay, nice question. Nice question from YouTuber. So you're aiming to see how the markets will move. Sorry, I'm running out of steam a bit. How New Year impact to the market, January 2021 and ending December 2020. Okay, I would like to share something with you, dear YouTuber. So I spoke earlier about seasonality, okay? The reason why I spoke about seasonality is that because in the stock markets, in the equity markets, we have identified the past 4 years the seasonality effect. And what I mean by that is that is because, sorry, so it's because it has been noticed that that every December and January stocks are doing quite better, like they are on a beat. This is what has been identified over the years. So we've seen a lot of appreciation of the stock indices, the stocks, the equities, markets in general. So despite the fact that there is low volume because everyone is closing position, they want to shop, they don't have money to spend on trading, and a lot of people, because of holidays, that don't even trade. However, I had in the past actually provided several educational material for seasonality, explain seasonality, but I would like to show you to show you a chart. I'm not sure whether I will manage to do that right now, but maybe I can actually. No. Okay, so you need to know. We'll get back to you with further articles in regards to seasonality, but what has been identified is that global stock markets tend to appreciate, to be in a rally during the period of December and even January. Why is that? It's the so-called Santa Claus rally. Okay, so let me show. Let's get back to stocks then. Okay, you've seen that. Here is S&P 500. It's been to the upside since the pandemic, since the March, the very first lockdown. So, okay. So as I was telling you, based on the term seasonality, okay, over the years, analysts identify the so-called Santa Claus rally. Okay, Santa Claus rally. So this what has been observed is that every December and January we have a nice rally in the equities, especially the S&P 500, even Nasdaq, Dow Jones. So in general, in the stock industry. Um, so the reason behind that is that people are, first of all, closing, like, because there are not a lot of market participants in the markets due to the holidays. Sorry. Excuse me. So as I was saying, so seasonality could be taken as an indicator, or if you prefer, it's something that you should monitor really much, pretty much, like you should be aware of, because there are some key dates, key months that we tend to see on particular assets, either depreciation or or uh, appreciation. Seasonality. So in December, okay, every December, because everyone is like getting out of the market, we pretty much having banks taking their position, the big players, the institutional players, okay, the institutional players. So what we are seeing is that stocks, indices are subject to the influence, okay, are subject to influence by recurring tendencies that produce patterns that are apparent in the investment valuation. So tendencies, what I mean by tendencies, it might be weather events, calendar events such as Christmas, Thanksgiving, New Year's Eve, and etc. So you should identify these key dates and see how the markets are performing on those particular periods. So, based on the theory of seasonality, we have identified that, I'm not sure how can I share this with you, but okay, I have a chart, a histogram, that says that every December and January, okay, so at the end of the last quarter of the year and the very first quarter of the year, we have appreciation of the stocks, okay, historically, and this kind of seasonality is quite good because it could be used in conjunction with other forms of analysis such as trading strategies or anything you're using. So over the last 20 years, for example, S&P 500 that you can see over here has moved higher by 75% of the time. So it moved more than 2% in December. Okay, so there is a strong seasonality stocks for December. This is, we don't really, there is a lot of reasons behind that. It should be because banks, institutional players are taking their position for the year ahead. So there are a bunch of reasons on that seasonality, but also it's the shopping. It's a period that we shop a lot. We want to give our presents. So by definition, this is what is going on during December. So it's more or less, how can I say that? Momentum profit reason. So yeah. So let's me actually make everything very complicated and might confuse you, but if I go back and see together December, okay, here was, okay, that was not a good example, but here it was December 2018 and up to April it was appreciated. So the assets tend to appreciate the last on December up to the first quarter of the year. So here is December 2019 appreciated. If you go back down, let's find another December 2017. So in 2017 here we are, it started from November and up to the end of January it was moving higher. However, in December 2018 things weren't so good, but as I said, 75% of the time the assets are appreciated in December up to the first quarter of the year. Okay, I tried to find my article in regards to seasonality, but I can't. Okay, so I will simplify a bit things, okay, by saying that you should have in mind, okay, that especially in December and January, because of the holidays, there are only few traders active in the market, okay? So this is this is why it also affects how volatile the share prices are. Okay, so there is this kind of a jump by the end of the year and in January as well, because the institutional players, the big players, as I said, they're taking position or even put money in the market in order to do their long-term investments, their yearly investments. So they put some fresh capital in, okay, fresh capital. That's why this fresh capital is really placed most of the time at the end of December and or in January. So this historically benefits the stocks. So keep an eye on stocks. USA 500, tech stocks, Dow Jones, Nasdaq, Amazon, Tesla, Facebook, any kind of stocks, even pharmaceutical stocks, because with the new COVID vaccine, we might see them being supported quite nicely. Okay, so remember, end of the year, January, we have fresh capital. End of the year, people are repositioning in January as well. There is no taxes to be paid. They have been done already. So more or less, tax and the fresh capital is what drives the market by the end of the year, and especially in January. Okay. So I ran a bit out of steam. Sorry. It was a big question, my dear YouTuber. Here, there is no question here. A bit late, I don't know what strategy you're analyzing. Sorry. You're gonna see the live once we end it. Let me move a bit to Facebook to see what you're asking over there. New Zealand dollar. Let's shift to New Zealand dollar. Okay, New Zealand dollar to the upside as well, boosting further to the upside. It actually broke this triple up fractal. Can you see that? No, you can't yet. Why? It hasn't shifted yet. Okay, so New Zealand dollar broke years territory. Okay, years territory, 1 year's territory. Broke actually the resistance that we had back in September, November 2018. So more than a year territory. It broke it and is moving further to the upside. And actually the momentum is very, very supportive. You can see that RSI pointing further to the upside, and MACD is pointing further to the upside as well. While Bollinger's are expanding to the upside. So strong overall outlook for New Zealand dollar. Daily chart, the same. Positive MACD. RSI crossed into the overbought territory, but is still sustained esteem above it. Any pullback, as long as it's not significant one, is just a correction. If we put our Fibonacci on, you can see that as long as the asset sustains a move above 0.69 or even 0.6850, then the asset remains to the upside. Intraday now, we have seen that it peaked to 0.7030 territory, quickly turned lower, choppy, sideways, but sustaining a move above pivot. So that suggests consolidation before a potential continuation of this long-term rally. So if it managed to sustain a move above pivot or even above the 50-period moving average, then the next level to be seen for the day will be 0.7030 or even 0.7047. But for the time being, it's flat. It's consolidating. You need to see the rebound and more precisely a break of this triple fractal over here. That was on Kiwi. You have a trading robot. No, I don't have dear Williams. Hello, who is gonna put me through? You're gonna see the recording anyway later on. We discussed New Zealand, Euro New Zealand. Okay, someone asked for Euro New Zealand. Euro Euro New Zealand. Okay. Here it is. Okay, here it is. Big sell-off. Strong Kiwi against dollar. It's been for nearly 2 months now, an aggressive sell-off, which actually is quite sustainable. What I mean by that, you can see that bearish momentum holds negatives, like it's a new trend. It looks like a new trend, a trend to the downside. So after breaking this up channel, okay, after it broke that up channel, it shifted to the downside, consecutively to the downside. So I need to go back to the weekly chart, I'm afraid, to check something. And this is what I wanted to check. You can see that it managed to break significantly this year support at 171.37. It's moving below it. But nonetheless, it also broke the 200 week moving average at 170.50. So weekly and daily indicators are suggesting a long-term bearish outlook, especially after it broke the 200-week moving average. It's outside Bollingers, suggesting a big sell-off, like bears are in control. MACD has turned aggressively to the downside, and this is just the weekly chart. If we go to the daily, the momentum, the negative momentum is even worse. So bearish outlook for Euro New Zealand in the daily chart. If I go down to the 1 hour chart right now, okay, clearly it's in the downside, but it's doing some correction. So by connecting the highs, okay, let's connect them. Actually, let me try something. It looks like a pitchfork. Okay, it looks like I needed to put the channel on. Let me try and do it. Okay, no, that's not good. That's not sufficient. So, okay, so by connecting my fractals and the low fractals as well. Oops, sorry, wrong line. Low fractals as well. Okay, we have some kind of a descending triangle. Okay, can you see that? So, outside the trend lines that I have. Let me remove some so you won't get confused. So this is a 4-hour chart. It looks like a bit of a descending triangle. It tested it once outside, it broke it, but it quickly turned back to the upside. So these lines could provide you some support and resistance areas, or potential support, targets and stop losses. So it has turned, it retested this upper line, it turned lower, it rebounded, it tried to retest it again, but it failed, pointing a second lower high, and it's turning back down again. So actually the momentum is clearly negative. You can see that, but there is a lot of pressure on the asset. It doesn't give us any sign of appreciation. It's the downwards movement is expected to be continued. Nasdaq, Steven asking, and for Nasdaq, I think I covered Nasdaq, didn't I? So Nasdaq is the only one that didn't affect it from today's profit taking. So it continued further to the upside. It actually broke outside my descending triangle. It's moving above the Ichimoku cloud. It recovered nearly all the losses that we have seen since October. So the next real resistance to be seen for Nasdaq would be this fractal over here, 12,400, or the August high, which is slightly higher, 12,454, but a round number 1240 would be cool, because a round number, and we could see it testing that area. For the time being, it's outside the descending triangle, so pointing further to the upside, breaking the latest up fractal, above Ichimoku, above 50 period moving average, with strong momentum. So it's positive. It's because investors have turned into a more defensive stocks, like tech stocks. So that's why Nasdaq has been appreciated. So daily picture remains positive. Intraday, meanwhile, it's very choppy because US market is on holidays. Simply as that. You can see very low volume, low volatility, because US is off. until Monday that US will be back from their long weekend. Okay, so choppiness, sideways movement, low volumes for the day, and daily positive outlook remains. The asset doesn't look overbought is still at 60, so there is further steam to the upside. That was on Nasdaq, my dear Stephen. Good goodbye, Hope Forex, one of the most rarely found patterns. Thank you, Mom. Thanks, Aldo, that spotted that diamond pattern. Okay, guys, if there are not any other questions, I will just go to the major ones. So I will do oil, Bitcoin, and Euro, maybe. Euro, yeah. So let's move on to Bitcoin. Okay, we had a very sharp sell-off today. That's pound euro. Let me put pound dollar. Okay, here it is. Okay, sharp sell-off today, as you can see. Rejected, turn away from the 19,470 highs, the nearly 3 years highs. Okay, sorry. Even though there was a nice rally on Wednesday, smashing 2017 peak, however, a correction was really much needed, to be honest. It was like overbought already, picking up to 3 years, nearly 3 years high, appreciated by 75% for the past 3 months. So it was overbought due to the fact that we've seen a lot of flows into Bitcoin because of all this uncertainty that we discussed earlier. So a lot of people shifted into Bitcoin because they treated it as a safe haven one, even though it's not one and it hasn't really confirmed as one yet. So these rising inflows to cryptocurrencies, or Bitcoin if you prefer, is giving some kind of exposure to Bitcoin movements without having to store the asset. Okay, this is points to a strong rise in demand for Bitcoin because of the uncertainty that we were facing in the rest of the market. However, today's sell-off is clearly a profit-taking reaction. There are still a lot of traders that they remain skeptical against the cryptocurrencies. It's not a regulated asset after all. It's not controlled by central bank and etc. So this appreciation was something similar with what we've seen in 2018 and 19, and it was clearly treated as a kind of a safe haven. So people tried to store the value by shifting their money into Bitcoin until we have a more stable global market. Something similar with what is usually happening with gold as a safe haven. Okay. So yeah, that was on Bitcoin, even though it found some kind of a floor earlier. But nonetheless, let's not forget this 3 months rally, so it might just running out of steam. We need to see a turn back to 17, okay, to 1700s at least, okay, actually somewhere in the middle of this candle. So by measuring this decline, it needs to get back to 17,900, so maybe 18,000, right? Let's make it round, 18,000, in order to suggest that it will get back to the upside again. If not, if it breaks the 16,470 territory, moves further to the downside, so if it crosses this 20-day moving average, then that suggests that this 3 months appreciation has run out of steam. Remember weeks ago, a few months ago, I don't remember, I show you this inverse triangle. Inverse head and shoulder. And I told you that if it broke my neckline, it would be bullish. And this is what actually happened. And I'm really, really glad that I saw it on time. So it retested the 2017 highs, turned lower. It needs a bit of a correction, but if it gets back below 1647, then it could get back to this support area 13,800. If not, if it managed to sustain a move above 18,000, then more appreciation is expected for Bitcoin, because after all, the volume remains quite strong. The positive momentum remains strong. Do you see that? Okay. That was on Bitcoin. Oil, last but not least, it reached to 46.35 territory before turning lower. That was on the better than expected inventories yesterday. That helped a bit to the optimistic side of demand for oil. Turned down, however, 245 territory and is consolidating since then around the 45 territory. So it's a bit heavy, remains a bit heavy, but remains quite positive after all. You can see that. So let's keep an eye to see what actually is going on. So let's not forget, guys, that OPEC will decide next Tuesday, December 1st, in regards to extending the prevailing quotas restrictions. So if they agree something like that, then we will see further rally, or we expect to see further rally for oil, okay? And as a consequence, further rally for Canadian dollar, because let's not forget that as long as oil market is bullish, Canadian dollars could be bullish as well, because oil is the dominant driver of dollar CAD. So as long as we have an oil strong, then Canadian dollar will be strong. So we are expecting OPEC plus. We are expecting 3-month extension, and if this happens, then we could see oil would likely swing the oil market back into supply deficit. Okay, so we could see oil appreciated further. Meanwhile, let's not forget that the global stockpiles are high, and the demand of the oil is below the normal due to the weather, due to the COVID, due to the measures, the restrictions, the lockdowns. So there is a tight demand for oil. So this could put some ceiling, but if OPEC Plus agreed to an extension, the next week we could see it, these news could support the oil. So that's why, because of this, because of OPEC Plus, because of the fact that the global stockpile are high, but demand on the other side is low. But on the flip side, we have also some positive news that the COVID pandemic could be gone, especially now with the vaccine. So there are a lot of motivating reasons for oil-producing nations to keep supply restrained. And if they keep supply restrained and OPEC also puts quota restrictions, then that could help from fundamental perspective the oil. So for these reasons, the outlook of oil remains bullish on the back of an increased optimism for the vaccine, and increased optimism that the oil nations could actually keep the supply restrained, and OPEC Plus will agree next week. So we remain in a fundamental bullish outlook for oil for December. So daily chart rallied, breaking this consolidation that has been seen since May. It broke it. However, we have a bit of a detraction today because it reached outside Bollinger's and needs some correction. So it's slightly positive as the overall picture, but we need to see a break of the yesterday's high for 4620 area in order to suggest further steam to the upside. Meanwhile, we have a bullish crossover here, 20-day moving average above 50. So, and positive momentum as well. So that's positive. Intraday now, it get back down, but it found support at $45. So sideways for the time being. You can see that MACD has flattened to zero. RSI has flattened as well. So consolidations for the time being. If it breaks the latest fractal out over here, 44.70, and if it breaks it, then it could find support at $44 or even 43.80, which is my 127 Fibonacci extension. So on that perspective, dollar CAD remains also to the downside. Canadian dollar appreciated against dollar due to the oil, remains below 130 territory, but sideways and very choppy right now. But definitely a break of the 29.90 territory could open the doors further to the downside, while on a rebound could find resistance at the 131 territory, 38.2 Fibonacci retracement. Guys, I'm running out of steam. I don't know. A blank. Can you see the screens, guys? I thought that you have been able to see the screens. Okay. So yeah, I'm running out of steam. I need to close the session. I see that there were no further questions. Hopefully, I managed to help you. If not, have a look again on the recording. Check what we've analyzed today, and you can come back to us with any questions, and we'll try to help you with anything. So I need to call it a day. Hopefully, you liked our today's broadcast. Sorry. So let's not forget that it's a US on holidays, so don't expect a lot of volume in the market and a lot of volatility. Tomorrow, US will be off as well because it's Thanksgiving. So take care because volatility and volumes will be back on Monday. So keep an eye on the trends and what the charts are telling you and the overall outlook as we did today, by checking the daily charts as well for each asset that we are mostly interested in too. So have a great week ahead, have a great weekend ahead, a long weekend ahead, and I hope I see you next week again. Okay, thank you. Bye-bye. Thank you for attending.